Hello everyone, it's James here. Welcome to the live stream. Don't be distracted by the appearance of the screen and these boxes and things. I'm trying something new, and if it doesn't work, I'll just go back to normal. I don't know why I'm so red either, or why these things all around, but anyway. Hello everyone, it's James here. Welcome to the live stream. Okay, so let me know if you can hear me okay. And for those of you here, just press a button and say, yes, I'm here. And say hello to everyone else. And we'll get started in about 2 minutes when this clock hits 2 o'clock my time, 8 o'clock New York. Hi there, Ruhan. Lovely to see you. Omkar, BP, good morning to you. Cryptal, 3B, good morning to you too. And Alicia and Jake and Tejas, is that correct this time? Tejas maybe, like as in the German Tejas, spelled slightly differently. We did chat about it earlier this morning in the private group. Good day, Stephen. Good day, Nyachlopsky Rozum, MD, Ritesh, John, and Tanil. Good afternoon, Tanil, one of my private group members as well. Duncan Glass Watson, thank you, wonderful. Somnath, lovely to see you. All right, folks, we'll start in about a minute's time. Once again, please ignore everything that you see on the screen. I don't know quite what's going on, but it's okay. We'll work around it. It's meant to be sort of interactive and fancy, but I think we can get rid of like maybe this thing at the top here, view account. Let's get rid of that. Or just hide it at least. Let's hide that. And then maybe this chat box. Let's hide that. And that. There we go. That's a bit better. And but now we've still got my face in a big block and it's very strangely colored. But it doesn't matter. We'll wiggle through this. So welcome to everyone else that's just come in. Thank you for attending. I really appreciate it. Somnath, Francis King. Francis. Hello, Francis. You're just down the road from me. Wonderful to see you, mate. We need to hook up and talk about some things. I've got some interesting Zanzibar news. Almost right. Tejas. I'm going to just say Tejas from now on. Good day, TC. Lovely to see you. One of my private group members. And Martin. Fantastic. I think Martin might be my favorite, biggest fan, and I appreciate that, Martin, very much. Okay, folks, it's 2 o'clock, time to start. Let's get into the charts. As always, please put up your questions in the chat box on your screen, and at the end of this, I'll get to your chats at the end. Please don't be distracted by these weird things on the chart. I just don't, let me see if I can hide this part. Oh, there we go. Actually, I can hide a couple of these as well. Let's get rid of that. Latest follower. Let's get rid of that and move this down a wee bit. There we go. And I don't know why it's so red. Actually, I do know why. I'm going to fix that as well. Please bear with me and we'll be ready to go very shortly. And I think it's got to do with the light in my office, which I'm now changing to make it better. I've got one of these sort of stage lights in here. Okay, folks, let's look at the charts and get going straight away. And I'll just switch across right now. And what we've got, let's start with this chart. This is the start. This is the chart of the stock indices and some of the stock names. And some of these names I'm busy in. Most of these charts I'm busy in. So we were short on the NASDAQ and the S&P. If you attended the last live stream, you'll know where we were on these two trades. Not massive positions, but positions nevertheless. And because we broke out through that high there and above this recent swing high, I had to hedge this. And I also hedged, that's the NASDAQ. So I hedged it underneath the green line, actually just at the top of this sort of move up. So there's some space between us and the hedge level. And if we drop back down into that hedge level, this is what makes it nice about hedging early, is if you hedge earlier rather than later, very often the price will leave your hedge behind and get above it like we have done on the S&P and the NASDAQ right now. Once we're significantly above our hedge level, we're pretty safe because We can always remove the hedge when the market price comes back down if we want to continue in the short direction. We can always just remove the hedge at break even and let these markets carry on their merry way downwards if they're going to do that. I don't think they are. They look bullish to me. But this is the great thing about hedging, is that we are now basically, we've locked in a small amount of risk on both of these, or a loss, basically a locked in loss. And I can sit on that for a day, a week, a month, a year, and nothing will change to my P&L. And at any time, I can adjust or take this hedge off, add some more to one side or the other, or whatever I want to do. The fact that we've moved up above our hedge levels, as I said earlier, is pretty good, because now we've got some space and some breathing space. If the market returns back down there and I want to remain short, I can just remove those hedges at break even. If I thought we were going to turn around right now and move down, which I don't think so, or I'm not aware of that, the fact that that might happen, but if we do move down right now, and I knew that we were going to turn around at this current price, I could actually take that long hedge off right now for a profit on the S&P, take it off right now on the NASDAQ for a profit, and add some shorts or just hold on to the existing shorts and let it go down. That's if I think, or I thought, that this price had topped, or that we're at a significant level, or it was incredibly overbought, or we saw some 4-hour reversal candles, or there was divergence, or some other signal told us that this was time to go short. We could do that and play it like that. So I love hedging. It's the way I like to trade. We're fully hedged on the NASDAQ and S&P. I think we're going up. We're not too far from the double top recent highs on the NASDAQ, just over here. And on the S&P, for your benefit, I drew in these circles. So I'll do it on the NASDAQ too, just to sort of highlight this double top and to remind you that this is a very significant level on the NASDAQ, and it's a very significant level on the S&P too. So there's the double top on the NASDAQ and the all-time high, and we're approaching that now very rapidly. We're very, very close to it, only a few dollars beneath that double top all-time high on the NASDAQ. It looks to me like we're going to try and break out through there. We've got this far, all the way from the bottom down in the 16s. We're back up above 22. Beyond belief, really. I've never seen a market like this in my 20-odd years of trading. I guess I would have seen some of this in the a little bit in the 2000s, actually, but you'd have to go back an awful long way to see this sort of V-shaped recovery and the Zweig breadth thrust, which occurs once in a blue moon and has never failed to produce a bull market. That doesn't mean I rely on those sort of rare event statistics to guide me. Of course I don't. The very fact that they've only occurred about 3 or 4 times means that there's no significant statistical analysis to be made from that. But it's still something to be borne in mind. And it looks like, actually, for the 5th time, if this is the 5th time, the Zweig breadth thrust is actually working out. We're very, very close to those all-time highs. We're fully hedged on the NASDAQ. And the same on the S&P. Fully hedged, very, very close to the all-time highs. Not quite as high as the NASDAQ, but not far off either. And there's that double top. I've got both of those double tops drawn in for you, just to remind you, with those circles just to the left-hand side of the charts on the NASDAQ and the S&P. So that's where we are. And at the same time, however, we've been long on all these names on this page, and we're also long on the German 30 until this morning. I took profit on the German 30 here at the 20-period moving average. I referred to the 20-period moving average in the last video, the last live stream yesterday, and I talked in extensia, a nice Latin word, about the importance of the 20-period moving average. Now, how it acts as a short-term support and resistance level, and it's also a short-term momentum indicator. Notice how we traded above the 20-period moving average until we hit the channel top. That's where we sold. We moved down to the 50-period moving average, a major support level where we exited the trade and reversed to long. So very, very simple. Top of the channel, break down through the 20, down to the 50, bounce off the 50, gap up. No more war, maybe, in Iran. And, well, I know the ceasefire has been broken, and I know that there have been few missiles lobbed back and forth. But I think the big threat is not that. I think the big problem is, or threat, or potential hiccup right now, is retaliation against the US and not Israel. And I think Israel and it's probably just miscommunication. Ceasefires are very, very difficult to manage, and no one really knows what quite goes on. There are still people, what they were, I think, about 30 years ago, people still living in Vietnam in the jungle who thought the war was still on, like 40 years later. So ceasefires are difficult, communication is difficult, no one really knows what's going on in the thrust of the moment, and I think these are just mishaps. The biggest problem would have been a direct and more comprehensive retaliation strike against the US assets in the Gulf region, which has not happened. The last attack by Iran on 2 US bases, one in Iraq and one somewhere else, I can't remember. I'll think of it now. Syria, maybe, something like that. Or, oh no, it was not Oman, one of those Gulf states. It's just flown off the top of my head. But 2 attacks, but they were telegraphed in advance, and the US knew about them. Iran made sure that no one was injured. Everyone knew about them, and most of them were shot down. I think one got through and exploded nearby one of the military bases, and no real damage. If there was further escalation in that sense, this would be a problem, but it's not. It's not going to happen, I don't think, and I think we'd be okay. This was the gap up that caused this big rally in the markets, all of the markets. The good news that this ceasefire had been proclaimed by Israel and Iran. Although we haven't heard from them, we've only heard from certain parts of we've heard from Trump, and we've heard from J.D. Vance, and we've heard from the Israelis, but we haven't heard from the Iranians, and we don't know what's quite going on with the ceasefire breach. But I think it's probably just miscommunication. Don't panic. Notice how we got to the 20-period moving average, and we've now hedged this. I got distracted and diverted from what I was saying. So we got short there at the top of the channel, broke down through the 20, got down to the 50, major support level. The 100's just below there. We reversed direction, essentially, and we've now hedged this trade. I have not taken profit on this, so we have 720 pips profit on this trade, and I have not taken profit yet because I'm not too sure if this is going to go higher or not. I really don't know. And of course, this is in alignment with the S&P and the NASDAQ, which are also approaching all-time highs, whereas the German 30 is still under its 20-period moving average. Which means we have a bearish bias on the German 30, but bullish on the other 2. And because it's so confusing and I don't know quite what to do, if in doubt, hedge. So we've hedged and locked in 720 points of profit on the German 30. So that's pretty good, and I'm happy with that trade. So we'll keep that hedge on, and we'll keep the hedges on the NASDAQ and the S&P, meaning that we're fully hedged across all the indices now, having locked in a small loss on the NASDAQ, locked in a small loss on the S&P, and locked in a very large gain on the German 30. So all of that is really in good shape, and I'm happy with that. Now, have a look at some of the names. We're also long. We went long yesterday on MSTR. I'm not sure I put this up on X or YouTube. I don't think so, but it was certainly published in my private group towards the sort of middle or end of play yesterday, or actually quite early on in the day. I'm not too sure. Somewhere around about 2 hours after the start, we went long on MSTR. So we're long on there. In pre-market, we're already about, I don't know, $6 up on this position. So that's looking good. Targets for this much, much higher, at least to this recent all-time high at about 550, 545 to be precise. So that's MSTR. We've gone long on that. Remember, we're hedged on the NASDAQ and the S&P, so we're not short. We were short. We're now hedged. So we now swung our bias more to the long side, even though we're not long on the NASDAQ and the S&P. We're not short anymore. We're hedged. We're long on Tesla. I mean, what can you say about this? This was just unbelievable. We got long right down here at about $310. We're now trading at $356. So that's a $46 profit on this trade already, which is well over 10%, more like 15%. So that's where we are, trading right up at that high in pre-market, and I expect Tesla will carry on moving up. Robo-taxi seems to be the thing now, and I can't wait for my own Tesla robot, not the taxi, but the actual humanoid robot. So we're long on Tesla, we're long on ARK-K. This is the innovation fund. Tesla's a big part of it. So is Coinbase, so is Bitcoin, some of the other cryptos, some of the medical advanced research names, and all sorts of tech and AI names. There's a whole basket of stuff. I still haven't quite checked whether they've changed their basket of holdings, but I don't really mind. Whatever they've got, I think, is currently working pretty well. We got long here at about 60. We're currently trading at 70 almost. Actually, just under 70 in pre-market. We're long on that one too. And the targets for this one, much, much higher. There is so much space above us. Notice, this is the daily chart on ARK-K, the innovation fund, Kathy Woods. Notice that we lost about 90% of the capital in this fund over the last 2021, 2020, after COVID, etc. And we're now just trying to recover some of that. I really like this. I think this has got a great potential. There's so much space up above us. There's nowhere to look really, unless we zoom in minutiae in some of these levels here, try and find some support and resistance. But as it stands right now, we've broken up above that level. That's a very key and important recent swing high, at least since 2022. So this was a 2-year high that we achieved in February, and we've now just broken that and closed above it, and we're still moving higher. We are near the top Bollinger Band. We need to be careful. This is looking a little bit overextended. That's ARC-K. And then NVIDIA, we're also long on this one. This one's also in good profit, moving up in pre-market. A little sluggish compared to the others, obviously. I think AMD and a couple of the other chip names have done a little bit better than NVIDIA, but maybe this is just what they call, and it seems to be a common, and there's a fly, seems to be a word that everyone's using these days. It's funny how these trading terms come and go, and how people coin these new phrases. The new word of the day is PIT, P-I-T, and that stands for pullback in time. In other words, rather than the price dropping to reach a moving average, for example, like the 20-period moving average, the green one here, rather than the price from here, look at my chart very closely, see how far we're above where my cursor is, 14th of May, how far above the 20-period moving average we were, but we haven't moved down. The moving average has caught up, and that's what you call a pullback in time, a mean reversion without actually traveling towards the mean. We waited for the mean to come towards us, and that's called PIT, pullback in time. Seems to be a word that everyone likes to use for some reason. These trading terms come and go. Nevertheless, I think we're okay on this one. Currently trading in pre-market at 145 and some change, and we're long at 143, I think, 142 and some change. So that one's a bit sluggish, but we're still long on that one as well. So we're long on MSTR, Tesla, ARC-K, and NVIDIA. We didn't get long on Coinbase because I missed out on that trade altogether. We have been long on Coinbase. You can see our last tranche was over there, and we were long from over here. We got some longs down here and some down there, but we got out in this quagmire here and never really got back into Coinbase again. So that took off without us. So be it. That's the way things go. And that's stocks, folks. I think I've covered as much as I can on stocks. And unless there's anything else on stocks and that sort of thing that you want to cover, if you don't mind, I'm just going to pour myself some Coke. I hope you don't mind this. I know some presenters of these sorts of shows like to keep them very formal and structured and professional. I like to keep them professional, very professional, but not structured or formal. Okay, so we've dealt with stocks. I think we've dealt with currencies as well. Maybe we haven't. Actually, no, we haven't. So we're long on the euro, we're long on the pound. Please look at the last live stream. I don't really want to go into detail on every single instrument because I trade a lot of different instruments. For some people that only trade crypto, for example, or currencies or stocks, these live streams and videos that they prepare are much easier because they've only got, maybe 5 things to look at or 2 names, whatever. I've got about 30, so it takes a lot of time and it's exhausting repeating the same thing over and over again. Nevertheless, have a look at the live stream from yesterday and particularly on the targets for the euro and the pound. And my targets basically are 700 pips down on the dollar index. I'm not going to repeat everything that I did in yesterday's video, so I do encourage you to go and have a look at that. Dollar index is broken down below Dixie Moab, down below the mother of all breaks. I'm expecting this to move down about 600-700 pips down to this block here, and that's at about 93. We're trading at 98 now, so it's only 500 left to go. We've got a big megaphone pattern here. It's a very broad view of this market, the dollar index. We're looking at it from a very grand and broad perspective, and as you can see, and it's a weekly chart. This is not a daily chart, by the way. So this goes all the way back to 2020. As you can see, we've got this massive broadening pattern on this chart. The red lines denote that. And the expanding pattern should see us reaching the bottom of the expanding or broadening pattern, megaphone. It has various names. Should see us reaching the bottom of this pattern and down into this order block somewhere where my question mark is. It's also where the 200-week Bollinger Band is. So that's my target. That's about 500 pips below us, which means we should expect about 500 pips up on the pound and the euro and the yen. and therefore we're long on the euro and long on the pound. We were long on the euro and long on the pound. I'm still long on the euro. Look at yesterday's candle on the euro. Very, very weird and interesting. And if you're a chartist and interested in these sorts of things, which I am, it's what I do, it's my life, it's what I live and breathe, is charts. Now, yesterday's candle on the euro, bouncing off the 20-period moving average after a gap down, no candle, no wick at the bottom at all, not even a pip, and almost no wick at the top, maybe 2 pips. Very unusual candle, straddling the previous candle completely, engulfing it completely, even though it's a bullish candle. This is a bullish engulfing candle in extremis, and expect this to move up. So 500 pips on top of the euro takes us up to, we're currently trading at 1.16. That would take us up to 1.21. I'm going to quickly open up this euro chart for you and show you how that looks on the weekly chart. So once again, very similar to the dollar, we've got an inverse pattern here on the euro. It's exactly the flip of what the dollar index looks like. Being the major portion of the dollar index, it's no surprise. So there's my target. Remember I said 1.21 using that 500 pip dollar index target, and that takes us right up into really the top of this blob over here, about the top of the blob where my question mark is. So that's the target I have for the euro. We're currently long. We're about 100 and something pips in profit on that one. But I've also just taken profit. We've got a couple of other trades on, by the way. I'll come to those shortly. We've also taken profit on our pound longs at this top, and after getting long here off the 50-period moving average on the day chart. We got long at about 133, call it 1.34, and we got out at about 1.36. So we took 200 pips profit on that trade. It took 1, 2, 3, 4 days. 100 pips a day on the pound. That's excellent trading. That's what you want on a really good currency move. 100 pips, brilliant. We got it on the pound. We've taken 200 and we're out of that trade now. Now, you might say, well, this is going to go up much higher. Excuse me. If you think the dollar is going down, this should go up higher. Yeah, it should. I think we could get a bit of a pullback, and I'm not worried about missing out on the pound. It's always a good idea to take some profit at some point. You've got to do that sometimes. I don't generally like to take profit very often. I tend to delay the profit-taking process as much as I can. And so I don't really like taking profit, particularly in a bull market that seems to have a lot of momentum. But you have to take profit sometimes. And because we're also long on the euro, and I'm going to switch these back to day charts, and because we're also long on the euro, I don't mind being out of the pound, and we've got a magnificent profit on there, and we're at the top of the range, we're near the top Bollinger Band, and let's take some profit. On the euro, we're still running. I'm going to allow that to run up into that blob at around about 1.2. We might not get through 1.2, it's a big round number, but 1.21 is my target as the dollar moves down. And then we're also long on the Aussie, and unfortunately I didn't manage to add to this position. And there's I've had this arrow, this green arrow drawn in on this chart. This is the Australian dollar, US dollar chart. I've had this green arrow drawn in here for about a month now. And we're slowly getting there, and we're a little bit premature, a little ahead of time. We got long over there, the green arrow, and I've been waiting for this to dip down, back down to these trend lines to add another little tranche to this position. Well, we did that, and I didn't get any more positions on here. I thought once we broke the top trend line, we'd get down to the bottom line, but we were held up by the 100-period moving average, dead center. So I didn't manage to add any more size to this trade, but we're still long nevertheless from a decent price all the way down at about 0.64. We're trading at 0.65. So we have 110 pips profit on the Australian dollar, US dollar trade. So once again, if we add 500 pips onto there, or 600 pips, that'll take us up to 0.7, and that's where we should end up if the dollar does its thing and moves down to 93. So I've got a 500 pip target on the Aussie, 500 pips on the euro, and the pound we're out of now, having taken and already banked 200 and something pips, just around about 200. We're also short on the euro yen, and I was about to hedge this. Let me explain this trade to you. 2 short positions here at the center of your page, center of your screen. The red arrows facing downwards. 2 short positions, fully hedged on the breakout above the resistance level. Fully hedged those 2 positions. So that orange arrow that I'm highlighting right now is equivalent in size to the combination, the addition of those two red arrows. So that's a full hedge. We then went short at the next Fibonacci level, keeping that hedge in play, not adjusting the hedge at all. We went short again at the top of the 618 fib, and it burst up through the top there. We now only have that one short position. It's a small position. This other lot down here is fully hedged. We'll address it if and when the price gets back down to the orange arrow. I'll take the orange arrow out at break even and let these others run. Or we may actually take profit on the orange hedge, the long trade, somewhere higher up, somewhere around here. If we see a clear and obvious reason. I don't see that just yet, and we have another new target up here at about 171, which is a 78.6% fib. So that's where we are, and I was considering hedging this yesterday. Almost did. But then yesterday we dropped down almost immediately from the high, down a bit, and then today we've carried on moving down. So my plan currently is, let me just show you, is I'm going to hold that short position there, the red one. I'm going to take off this hedge at break even, if and when we get there, and then I'll have a short from there in profit by the time we get to the orange arrow and take that hedge off at break even. I'll have a short in profit from there, and then these two shorts from slightly lower down. And that by that point, we should be more or less at break even. So that's the play on the euro yen. Just wanted to sort of highlight the structure of that trade to you. And then we also have a short on the pound yen. Very, very similar, although we only took one small position here. We've got no other additional positions at the top of the channel. But we've moved up to the 618 fib as well, like the euro yen. This is the pound yen, GJ, very similar to EJ. And once again, also trying to form a little reversal. We do have the top 200 period Bollinger Band above us still, and also the 78.6% fib slightly higher at 200. The 200 period Bollinger Band is at 199, and we're currently trading at 198, just below there. So those are all the currency plays. We've talked about stocks. Let's have a look at crypto. Well, I mean, once again, I'm really going over what I covered in the last session, but this is super simple, super easy. You can see all of my long positions from down here in the 70s and 80s, and I've held on to those all this way. I've moved some of it into cold storage, and I've added more positions on here at the point. So I'm doing a little bit of a shift between trading and storing my Bitcoin. But what I do like about this pattern right now is that we got down to the bull flag bottom. As said in last week in yesterday's video live stream, this is all a bit too neat, too perfect, too pretty. Markets just don't trade like this. But this one has. Sometimes they do. And we got down to the bottom of the channel. It's a bear flag, bull flag rather, just poked through the bottom of it and bounced up very rapidly. And I also managed to add another small tranche of another small long tranche on Bitcoin just below 100, and my private group members will know about that too. The 200 period and the 100 period confluence is below us, as is this red trend line over here. I honestly thought we'd have to get down to the trend line and the 200 and the 100 where my mouse cursor is, and probably break that and test it down to about 93, this flat bottom ledge here, and then bounce up again, having stopped out everyone relying upon the 200, the 100, the trend line, and this 38.2% fib. So much, and the bottom of this bull flag channel. So much support, so much technical confluence here that it was just too tempting to break. And I would not have been at all surprised if we had dropped down to 93,000 and maybe even slightly lower, but 93 would have been good. It's also a flat bottom. It's also a previous resistance and support level, and it's below all of this sort of technical support and most traded zone. But as it has happened, and very surprisingly, the market actually bounced up, didn't even get to the 200, didn't get to the trend line, didn't get to the fib, almost got to the fib, but did penetrate and bounce off that bull flag bottom without testing the rest of it. So very strange to me that we didn't break this, retest it, get through there, stop out some of the short retailers. But I think, looking at some of the comments in my private group last night, that the retail traders all had, or the leverage positions, rather, should I put it that way, not necessarily retail. Some institutions and funds trade with significant leverage, but the leverage positions, the stop losses or the hedges or the whatever protection they had on, maybe options, whatever, was just below 100. And apparently, those are all cleaned out. And the chart seems to agree. The chart shows a massive clean out just below 100, followed by a huge bullish rally. I don't have volume figures. I don't have any of the other background data, but I would assume, I'll find out later in my private group from some of the folks there who are all over this sort of data, which I don't always have myself. Some of my folks do, and they will tell us what's going on. But I think you'll probably find there was a massive clear out of long hands there, and maybe even a whole bunch of people that went short that have also now been cleared out once we've rallied back up above there. So we're long on Ethereum, also big bounce off a very technical support level, which I also thought would probably not hold, but it did. A trend line, 100-period moving average, order block, etc., etc., etc. And the Fibonacci, there's a Fibonacci level here too. I think it's the 618. And we added a new tranche right there, just relying upon this pattern and also thinking at the same time, because this pattern's so neat, it probably won't hold. If you remember in my live streams and yesterday and in the videos last week, I got asked a lot about Ethereum, and what people were asking was, is this bull flag going to hold and will we carry on upwards? If you remember, I said no, it probably will not hold, and it's just too tempting to clear out all the volume, all of the hands, all of the leverage just below that level at about 2,400. We cleaned that all out, got down below the trend line, fractionally down below the 100-period moving average, probably stopping out, similar to Bitcoin, a whole bunch of long hands, and also probably putting in a whole bunch of short positions from those who are looking to the short side. So a double whammy, longs got stopped out, shorts got stopped out, the market's free and liberated to go up. I think that's what's happened. I'll find out more details later. That's Ethereum, Bitcoin, same on XRP really, although this one was a bit more classic, not very difficult. Just to move down to the Fibonacci level, big spike and a move up. So we got long at the bottom there as well. So that's probably a pretty normal technical pullback and retracement compared to the other two. Right, now everyone wants to know what's going on. What the hell? Did you hear Donald Trump swearing this morning? I've got it on, he said the F word on TV in front of reporters. Why am I bringing all of that up? I don't know. Anyway, let's talk about gold. Basically, my thesis has not changed, and at least I'm consistent, if nothing else. And I've been saying after we reached that high there, we've been selling gold ever since. So we sold at the top there, we sold over there, we sold a bit there, we sold a bit there, we sold some more at the top there. And so we've got a mixed bag of short positions, a couple of positions that are still open. We've taken profit on some of the higher up ones. So some of these are still open, I think these 2 or 3, and we're moving down. Now, I do think that gold is probably a bit overbought. There's no yield on gold. I think there are things that are offering better opportunities. People are looking, if I was still trading in for a bank, when I was trading for a bank, I would be looking for high yield opportunities. I'll be looking for trades that can give me some money, some profits, and pretty quickly, particularly if it's near bonus time, which it is. And so we want to be getting into the market where we can sort of find something to leverage, to work with, to make some money off. And long golds are just not that at the moment. So gold doesn't even give you a yield or a return. So you could hold on to just cash, for example, and get 4.5% or 4.2%, maybe 5%, maybe 7%, 6%, depending on where you bank. Or you could hold on to gold and get 0% and hope that gold goes up. Well, that's not a great bet in my opinion. I'd rather bet on gold going down or just get out of gold altogether and use that money, allocate your resources and your assets and your finances into something more interesting. Something like Bitcoin or the NASDAQ or the German 30 or natural gas shorts or sugar longs, whatever it might be, or Coinbase longs. So that's the reason why people don't hold on to gold for too long. Once the rally is done and dusted, we then all wait for a pullback. When I was trading in a bank in Holland, there would be these periods during the month when these pullbacks were expected that everyone would move into cash or into something, bonds, something slightly less, slightly innocuous, I suppose, but with a decent yield. Anything with any yield whatsoever is better than gold because gold has 0. So if gold's not moving up, you're not making money, and gold therefore has these periods of doldrums. And I think that we could see one of those coming up now. Pullback targets down here, this flat bottom level here at 31.20, then down here to the next trend line at about 29.20. Maybe 1.29 actually. I keep on saying 2,900. I keep on saying 3,000. Yeah, I suppose about 3,000. There are a couple of targets here in the interim. This is what I want to point out. First of all, we've got this very sharp, steep trend line. What you do notice about this sharp trend line, the steepest one, let's get rid of this one. Hang on, what have I just deleted? The wrong thing. Damn. I don't know what I just deleted. Anyway, one thing you must notice about this trend line, let me just make this bigger just because I want to highlight the one I'm talking about. Okay, this trend line here, the big black one. What is the first thing that you notice about it? Apart from it being very neat and very long, it goes all the way back to December last year. And it all looks great. And everyone will be thinking, well, you know, we're going to bounce off this trend line and move up, obviously. Well, the thing is about this trend line is that we've touched it, I don't know how many times here at the beginning. We've touched it twice here. Let's say that was, let's just call that one time. We've touched it twice here. That's 3, 4, 5 times. After 5 times, a trend line becomes unreliable and it should be broken. So 3 touches, 2 touches, 3 touches, 4 touches, 5 touches of a trend line, 6, 7, 8, it becomes more and more precarious. And eventually we will break down and start moving down. So if you want to try and buy the bounce off this trend line and the Fibonacci level, let me zoom in, that's the 50% Fibonacci retracement level, then you might have a good argument to do so. It's a 50% pullback, it's where the 50-period moving average is, and it's just above this rising trend line. Excuse me. However, we've had so many touches on this trend line that I don't think it's going to be particularly strong, and I'd anticipate a move down below the trend line down towards this next level at about 31.20. That's not to say, however, that I'm right, and it may bounce off this trend line and the 50% retracement and the 50-period moving average and move up to new all-time highs. I don't know. I don't think so. I think we're more likely to go down to at least the next level, down to 31.20, and then probably $3,000. So in lieu of that, and because I'm still short on gold in a bull market, and remember, I am still bullish on gold. I don't believe it's a bear market. I'm just waiting for the pullback down to about 3,000, where we could then, I just want to get this line back to normal, where we could then start to relook to buy. So that's my plan. But because we're long on we're short on basically a bull market, I'm also long on silver at the same time. We've been long on silver, short on gold on many occasions now, recently. And as you can see, rather than moving down like gold is, silver's gradually and consistently moving up. We're holding the 20-period moving average. We had 2 spike lows right there, but it looks like we might try and break down there. Gold is moving down quite rapidly. We're long on silver from there, but we're short on gold. One of these will work, one of them won't. Eventually, we'll run out of luck. And the fact that we've made profit 4 times already on short golds and long silvers simultaneously means that probably won't carry on being such a good play. And we'll see how we go. But one of these won't work out. It looks to me right now that silver is going to be the loser and that we're going to move down on both of these markets. However, I'm looking to buy both of them in the medium to long term. I'm also long on copper, and that's doing okay. I think we've got a bull flag here. And if we can just push up through this order block, up through that swing high at about $5, and if we do close above about $5.30, which is the very top here, and it's looking more and more like we could do it. I think actually the weekly, all-time weekly close, high close, could be $5 actually. I think if we close above $5, or it could be a monthly close, it's either 5 or 5.30. I can't remember. I'd have to go back to my research notes. But nevertheless, we are going to close copper at one of the highest levels it has ever closed at. And so far, it's holding up pretty well. So we're long on copper, long on silver, but short on the shiny golden stuff, gold. Let's go to natural gas and oil and uranium. Uranium, I'm out of URA completely. We took profit at the top. Discussed this yesterday at length in the live stream, so I'm not going to do it again today. We got long down here at about 22, and we got out eventually at about 40, just below 40, and took all of that profit off. and we have no positions. I'm looking for a pullback down to about 33 or just around 30, slightly below 30. Down to these moving averages, there's the 200, the 50, and the 100. We're still long on UEC though. I have not taken profits on this. In fact, I've done the opposite. I've added a new long tranche here. We're long on UEC from $4.73. We're also long from about $6.50. Currently trading at 666, the number of the beast. And we have a new long tranche from $6.46. So I'll be looking to, we're just going to hold that position. Hopefully it'll keep moving up. But if it doesn't, and it needs to have a little bit of a pullback, I'll be looking to buy and add URA longs onto my current UEC positions. Natural gas. Right. Now, I'm going to try and be as clear and precise on this as possible so that there's no confusion. If you were following me, and I'm not going to sort of try and go through all the intricacies of what happened, but I think you'll kind of get the gist of it. If you've been following me, you'll know exactly what's going on, so it's no big deal. If you remember, we rolled over on the weekend. We had that potentially catastrophic weekend with the Iran issue. The market gapped up on natural gas up to the 20-period moving average. At the same time, oil gapped up. Both of them we sold right at the top. At the market open, the moment the market opened on Sunday, we entered a short on natural gas. We entered a short on Brent crude. We're not trading Brent crude, we're trading WTI. We got short there, and we held that short all the way down. We took a little bit of profit off there at the 50, and we've just exited this trade right now. We're out of this natural gas trade altogether. So another little in-between trade of about 20 cents, really, really good, 24 cents, whatever it was, on natural gas shorts on the Pepperstone Continuous. Now today, my broker has rolled over, so I'm able to trade the new front month on natural gas futures, and this is where we are. Ignore what we've just done because it's a different price, a different chart, different everything. That's an ETF. This is the futures now. This is the 4-hour chart on natural gas futures, the Henry Hub futures at Black Bull, and we have not had a position on this until this morning after having taken profit on those trades prior to the weekend, if you remember that. We did not have a position on this over the weekend, and we did not have a position on the continuous over the weekend. We sold the continuous contract at the open on Sunday night, and we are now out of that. So forget the continuous contract now, or continuous ETF. We're now back in the futures. And this morning, I took a new, fresh, long position, our first position on the futures in this contract. These are all closed. That was a short, we took profit there. That red one at the top was a short, we took profit at there. That one at the bottom was a long, we took profit at the top. These are all shorts, we took profit at the bottom. So these two arrows that you can see on the left-hand side compared to where we are, the red one at the top and the green one below that, that trade is now over and done. The only trade that we have on now is this long trade from 374, and it's moving up slightly as we talk. We have a big spike low through the 100-period moving average in the middle of this order block, and I do feel now that perhaps there's a little bit more optimism if the markets rally, if industry picks up a bit of steam. One thing that war does, it generally tends to rally the markets, but it does sometimes put the mockers on industry, and transport and shipping in particular, in this case, has been an issue. And if all of those issues and concerns are removed and manufacturing is able to pick up a bit of a tick in pace, and demand for natural gas improves, and I know we're entering summer now, so perhaps there's a little bit of demand from heating of the atmosphere, cooling of spaces, and so on. And I think we could actually get back up to a slightly higher level. I think natural gas will be trading between $3 and $4, and maybe that range is actually slightly lower. Maybe it's like $3.50 to $4.50 in the next, let's say, 6 months. Nevertheless, the reason I took this trade, we are trading right in the middle. We're not at the top, we're not at the bottom, we're in the middle. So it's a risky trade. I have a smaller position on this. It's bounced off the 100-period moving average, big spike low, and we're forming another one on this 4-hour chart as we speak. So let's see how we go. It's a smaller position. I'm willing to add on to it. There's the 200-period below us, and these sort of support levels down here. That's another potential level. I'm willing to add to more to this position without stopping it out or hedging it at this point, because it's small enough to do so, and it's barely moved. And we're just 1 cent in profit right now. All right, WTI oil. Now, someone did call me the king of crude, and I wasn't quite sure. I actually took a bit of an affront. And they posted this chart that you've seen many times. So I thought it was a bit rude, but it's not. He didn't mean I'm a crude man. He meant I've traded crude particularly well, I think. I'm hoping that's what he meant. But these are our trade positions. That's been really good on crude because, and it's not always like this, folks. We don't always get it right. But over the last, I don't know, 2 years, crude has been fantastic for me. And we've been short most of the time. We were long twice at the bottom here, quite recently, beginning of May. And I think that's the only time, maybe one other occasion, that we've been long on WTI. So king of crude, maybe not, but I think we've traded this pretty well. And when we got to the top of the channel yesterday, remember we had a short from Friday, was it Thursday? And when we broke out and got through there up to the order block, just below that swing high, into the order block at the green level, this is a big resistance level that I had drawn in prior to this. And the moment the market opened, we sold a decent chunk of WTI. We've moved down from $75 down to $65, a $10 drop in the price of oil in just a few hours, really. And we're perfectly in that trade right at the top, short. And so pretty happy with that, really. And it doesn't always work out so beautifully. These big moves, either you get them or you don't. Either you just happen to be in the trade at the right place at the right time, or you're not and you miss out. Doesn't matter if you miss out, doesn't matter if you make it. It's only money, and we're not here to try and sort of pick every top, every bottom, get every trade right, get 100% win rate. We're not looking for that. We're looking for good, consistent, profitable results. And when we get these big bond sellers, it's a South African word for bonus, bond seller. When we get these bond sellers, we just have to be glad and grateful when we happen to be in them. And if we're not in them, well, that's just luck. I mean, it really doesn't matter. It's insignificant in the bigger scheme of things. When you get these big moves, it's a bonus, bond seller. It's not what our trading is based on. And these are just additions to what should be a consistent, incremental growth in your account. And so if you did miss out on that short, don't feel bad. You know, if I hadn't woken up, it was the middle of the night, 1 o'clock in the morning, my time. And if I hadn't sort of dragged myself out of bed to my charts, blearily opened them up and had a look and taken the trade in my fuddled brain state, I may, you know, equally well could have just missed the trade. I mean, that's the sort of thing that trading sometimes is. So anyway, we did get that short. We've taken 25% profit off the short now. We're holding 75% of our trade on. And I will add to that on any rallies up to perhaps like $70, maybe 71. I'll add that 25% back on. And my target is back down to the bottom of the channel, back down to $55, slightly lower on this next occasion. And then eventually a breakdown below 55, below 50, and then into the 40s, if we should be so blessed as to get that sort of ridiculously large and low move on WTI. So I think that's basically all on energies, folks. I don't have anything else on there. And then the Rand is strengthening again. I don't even want to talk about that. We talked about it yesterday. US 10-year drifting down slightly again today. As a result, TLT should be moving up, but it's not, fraction down. And then the VIX just moving down to about 18. Maybe approaching an opportunity to start looking at buying the VIX. Remember this trend line? VIX doesn't trade in trend lines, but this one has worked. We want to pick up one of these big spikes up again, but not now. I'd like to get back down to about 12 or 13. Yeah, about 13.5, 12.5, maybe down to about 12 even, but I don't think it's very difficult to get that low. I think we could get down to about 12.5 or 13 on the VIX. And then going across the softs and grains, someone asked me today if we have a lozenge or a diamond here on sugar. We're trading right at the bottom of the channel. We're long on sugar. There's one long position. There's another one, and one right down here. So out of the money on sugar, but I do like this pattern. Excuse me. And I think we're going to move moving higher. We do have this lozenge on the 4-hour chart. It's a bit squonk. It's not actually great. It's gone out of shape now, but trying to form a base. Big bull flag there, big bull candle, and moving slightly up. So anyway, that might turn out to be a diamond reversal pattern. I don't know. But we're long on sugar. We're still short on cocoa. I've covered all of these, so I'm not going to do this again in detail today. Still short on cocoa. Still short on coffee. We've taken a fair amount of profit off on that already. And looking for coffee to move down. I've done all of this in the last video, folks, so that's why I'm not going to do it in detail now. If you'd like to have a look at this in more detail, please just go and look at yesterday's live stream, literally from yesterday. We'll We're also long on corn. That one's drifting down. Might have to hedge corn. Cotton's looking fantastic. I like cotton very much. Wheat into the buying zone again. If you're not long on wheat, it's a good place to buy. Wheat has broken out, and I think we'll see wheat moving up significantly. The fact that we've pulled back down inside this falling wedge doesn't matter at all. We've fallen back down to support, about 50% retracement of the rally, and down to these previous support levels and resistance levels down here. So that's a good pullback zone for wheat if you want to get long. We're already long on wheat from down here at about 540. We're currently trading at 560. And that's that. We've got nothing on soybeans and cocoa, coffee, we're short, corn, we're long, cotton, we're long, orange juice, we have nothing, and wheat, we're still long. And that's all, folks. Now I'm going to go through some of the questions and try and address some of those and give my voice a wee bit of a break. So let's get to some of these questions. And I'll say hello to a few more people that I didn't manage to greet earlier. Good day, Harinder. When did I take a long on DAX? I don't know what date it was, Harinder. It's on the charts there. You can have a look at that. I did post it up on X, and I posted it up in my private group, and I posted it up on YouTube. So if you missed it, perhaps you just weren't watching or whatever. Qatar, that's it. Thank you, Stephen. Qatar. Yeah, Qatar. I bet they weren't happy with their airlines being grounded, being the biggest airline hub in the world, or is it Heathrow? I think Qatar might have taken the lead now. So for them to have closed down their airspace was a big thing. Any opinions on commodities and crude oil? Highly wanted is your name. Welcome to you. Yeah, I've talked about crude oil already, and I've talked about commodities. Joydeep, good night, good evening from India. Always nice to see you, Joydeep. I want your view on silver, you say. I've just given you my view on silver. Aiming for 55 on silver, Joydeep. If DXY is negative, why long on the ZAR, US dollar ZAR? Well, it's got something to do with the ZAR, really, Fariba, not so much the dollar. Just my general view on the South African Rand is not very good at the moment. Never is, actually. So I'm always looking to buy that, always. Good day, Brian. Nice to see you, mate. Brian Perry from Energy Rogue. Lovely to see you too, Brian. And then Fariba Bahrami. Yes, you heard. Hey, this is so funny, man. Fariba Bahrami. Yes, I heard Donald Trump swear. First I've heard any sense come out of his mouth. Well, there you go. Isn't that good? First time I've heard anything sensible coming out of DJ T's mouth was when he said that word, which I'm not going to say, even if you ask me to, because I don't like swearing generally. And you can get all these YouTube cowboys in trading chat rooms and so on who just love to swear, and they love to be crude, and they love to be the man and the woman or whatever. Just be the cool person, a few swear words. I don't like that. Emily, stop spamming. That wasn't from me, by the way. That was Nightbot using caps. MD, good day. Inigo Clinton, nice to see you. MD, James, if possible, could you please check on Solana? I'd like to know what price I should go long. Sure, let me have a look at Solana for you very quickly. Let me go to the crypto page. Which one shall I swap out for Solana? Let's do copper. Let's do silver. Yeah, so while we're on the silver chart, just to reply to that one question, my target for silver, look at this, it's absolutely beautiful. So big consolidation, zigzaggy one, breakout through the 1.618% Fibonacci level. That was my first target, which we achieved quite a long time ago, actually, in October. This is a weekly chart. But if I just drag this down, you can see, and we're holding that trend line as well, which is great. There was that clear out with Liberation Day, which was a false break, obviously, because we've now moved higher. That's my next target, $43 on silver. That's the 2.618% Fibonacci extension level. And then the next one, the 3.618 at $50 and some change, $51. And then the final extension level takes us right to the all-time high on silver at $55, $56. That's the 4.236 Fibonacci. So any of these levels up above us are my targets for silver, and I think we've got a chance of getting up to the top. But right now we're going to talk about Solana. Which one shall I use? Coinbase. Let's have a look. This is the weekly chart on Solana. All right, so I've been trading this variously on and off occasionally, but not a lot. You can see what's happened here. It looks like a bit of a head and shoulders pattern, actually. Don't really like this, and I'm not really one to be too much into, I don't even know if Solana is an altcoin or if it isn't, but I'm a Bitcoin maximalist. And until we break up above that line there and this order block, I don't like Solana at all. In fact, this looks pretty negative. Big clear out through the top, secondary clear out through the top and failed again through the channel this time. And now down through the order block, big bearish candle yesterday, bit of a bounce today. This is a week chart, by the way. Let's have a look. So yeah, I suppose it looks a bit different on a daily chart. This is the daily chart. Yeah, so, you know, below all the moving averages, there's the 200, the 50, the 20, the 100. Below all of them, a little bit of a bounce here. One day candle, that's all. Just yesterday. You might be a Solana bull. I don't really have much, not really particularly interested in Solana. And in fact, there's another reason I wouldn't be buying. You can just put a good old trend line straight down like this until we break above that trend line, the 200 period moving average, the 100 period, the 50, we're trying to, the 20 we've broken above. This is the 4-hour chart, but all sorts of resistance overhead. And then looking at the weekly chart, of course, it just doesn't look great. I don't like this. I don't like the way it looks. Don't like this enormous extreme volatility. Let me put this into a log scale. Is that a bull flag? Maybe. I don't know, man. I have to say I'm not an expert in Solana and you know, Ethereum, that sort of thing. I consider myself to be knowledgeable on Bitcoin, but when it comes to these others, I don't really know. So yeah, could you be looking to buy here? Your question was, could we go long on Solana? Let's go to the 4-hour chart. I suppose, you know, if this is a bet that you want to take, this is good. Move up, broke the 50 period moving average, consolidation, bull flag sideways, and we need to get up through this trend line and the 200, which is above us. Even saying that, I still don't like it very much. Everything here looks a bit negative, including the daily chart, the weekly chart, and the 4-hour chart. So not really something. Let's get my chart back here for silver. We don't want to lose the silver chart. Black bull. All right. Let's get to some more questions. Brian, thanks for your comments. Fundamentals are currently bearish in the US on natural gas. Moves up are based on Qatar LNG concern, which are driving up LNG prices. Fundamentally, we should go down, but July has mega heat. Yeah, Brian, I think I agree with you mostly. I think that we should be moving down, but I think we may have a little upside to clear out first. So thanks for that. Appreciate that. So current values are trading off future heat and future LNG output max. Both haven't happened yet. If they don't, a fundamental drop is in order. And Brian carries on to say, for crude, institutional traders are quite frankly confused that we move down this much after a ceasefire, and Israel has already violated that. But crude hasn't bounced as a result. And another comment from Brian, which I value greatly. Brian and Bill are over at NG Rogue, folks. If you'd like to join their product offer at NG Rogue, they're specialists in natural gas and crude oil. Not only trading and technicals, but fundamentals, what's going on behind the scenes. Energy Rogue is the place. In fact, I'll type it up here, as I always do. So go to that website and go and check it out. That's Brian and Bill, the NatGas and crude oil experts. Brian says, for crude, institutional traders are quite frankly confused. They moved down this much after a ceasefire. Well, Israel already violated. Crude will be down. Crude will be watching the news. And Tanil, Did I buy the dip rather than shorting the rallies? Yes, that's correct, Anil. I will short the rallies as well, but right now I'm long based on the chart patterns. Hey James, please take a look at the Nifty 50. Nifty 50. You want to look at the Nifty 50? All right, let's look at the Nifty. Why not? It's not something I ever trade, and I have no information on it. So whatever I say here is completely nonsensical and has got no value to anyone whatsoever. Having said that, we'll look at it. What is it actually called? Just the Nifty, yeah. There's a Nifty 50. I know quite a lot of people, Indian traders, are very interested in the Nifty and might be interested in this channel. So if you've got some Indian friends around who are interested in trading the Nifty, let them know about this channel and get them to subscribe. And if they make enough noise, we can perhaps add it to our analysis. So this is the Nifty. It doesn't look very different to some of the other indices, actually. It looks quite similar to the NASDAQ and the S&P in some ways, although we've drifted down. There was Liberation Day, not quite as dramatic because we're already quite low here. So slightly different pattern, steep climb out of there. And this is a bullish feathering pattern right here. So this pattern's more likely to move up than down. And we should see, it's sort of drifting along and then starting to angle upwards and accelerate and create more of a sinusoidal sort of curve or an epsilon type curve. That's what this looks like it's starting to try to do. We are moving down today. This is the daily chart. And if you go to the 4-hour chart, and of course this trades in advance of the NASDAQ and the S&P and even the LSE, the FTSE. So, we're Mumbai. I think, is it in Delhi, New Delhi or Mumbai where the Indian stock exchange is? I'm not too sure. So this is well in advance, at least I think about 6 hours ahead of the London Stock Exchange and 12 hours ahead of what's going on in the US. So this is kind of an advance indicator, and it's looking a little bit sort of boring, really. And we may expect a bit of a boring day on the rest of it too, if we don't get up through those levels. But yeah, I do like the way this is kind of looking. Let's have a look at the day chart. I kind of think it looks more like it's going to move up than down, but we are pulling back, consolidating. I think a good idea here would be to use the 20-period moving average as a sort of an entry level and the 50-period moving average as a stop or a hedge level if you want to go long. So somewhere around where we are currently at the moment, or a dip down to the 20 at about 24,875. We're currently trading at 25 and some change. Or if you want to be more conservative and cautious, you could wait for a dip down to the 50-period moving average. I saw an article actually, someone said if you put your entry price at where you would have put your stop loss. Let me repeat that. In this example, if your entry price is at the 20-period moving average, the green line here, and the stop loss is at the 50. That's my suggestion. But what if you said my entry price is at where my stop loss is? So instead of getting in at the green line, you get in at where your stop loss is, at the red line, and you put your stop loss lower than that. Now, someone did some work on that kind of concept, particularly for retail traders, and it seemed to be that many retail traders, if they'd put their entry price where they actually put the stop loss, they would have won a lot more trades than if they hadn't done it like that. So that's something you can put in your pipe and smoke, or you could just go for it and take a chance right now at the current price, or on a dip down to the 20, stop loss below the 50. The safer and the article's way of doing it is to ignore what I've just said and put your entry price at the 50 and your stop loss maybe below the 200. And that would make a lot more sense, a lot safer, but you may never get filled. And that's always the risk that traders face, not getting filled or getting filled into the wrong trade. And not getting filled is sometimes as bad as getting filled in the wrong trade. So very, very interesting. So that's the Nifty, and good luck if you're trading that. I don't trade it, so I can't really give you much more than what I've just said. And even that might not be very valuable. All right. Yeah, so there you go, GSA. That's my view. For what it's worth, okay? If you don't think it's valuable, then don't worry about it. But, you know, honestly, I do think that most retail traders get into trades way too early. They're too impatient, and they will get in at much higher or lower levels than they should. Guaranteed. That's what happens all the time. So one very, very simple way to save your trading account or prevent excessive drawdowns is to just not get into trades. Or get into the trade where your stop loss is, where you think your stop loss should be. Now, I'm not saying that that's the right way to trade or anything, but it's an interesting concept in Mumbai. Thank you, NK. So the Indian Stock Exchange is in Mumbai, not in Delhi or New Delhi. All right. TC has commented. Thank you very much, TC. And his comment is this. For those interested, I'm a recent member, and there's a real nice community, James, is with lots of help and knowledge to share and to help through your trades. It's definitely worth trying out 100%. Trust me. Okay, TC, we trust you. And I'll convey your message to the others that are watching this live stream. If you'd like to join the private trading group, there's a link below. There's a current discount on. Click on that link and come and join us. And all of my trades, every single trade that I take, I post up, I discuss, I give the adjustments, stop loss, exit, hedges, whatever I'm doing, every single thing I post up there. But if you don't want to do that, click the join link below this video, and you can join the channel for only $1 and still be part of some of the things we're doing. And also keep an eye on your mail inbox, because there's some very exciting news that's coming up today or tomorrow, no later than tomorrow. Some interesting material that I'm giving out to the community for free. So keep an eye on your inbox for that. But thank you, TC. I appreciate your kind words. And yes, I do agree with you, actually. I don't think if you're going to waste your money, losing your money trading, rather spend it with me and lose it slower. Rather than losing your 10 or 20 or $5 or $50,000 trading account immediately, lose your money slower by sending it to me, and maybe you'll learn how to trade in the process if you're struggling with that. All right. So there we go, folks. That's everything for today. I think I'm just going to quickly scan through the charts as I do before we finish off, just to see if there's anything that needs adjusting or changing, or if my views or opinions have changed on any of the instruments that we've been talking about, and they don't seem to have changed on anything on the currency markets. We've still got the Nifty up here, so I'll just leave that there for now. Can't remember what was here. It was the German 30, right? Let's put the German 30 back here where it belongs. And German 30, Black Bull. Yeah, so German 30, by the way, I don't know if I actually mentioned this. We did actually hedge this. We haven't exited this trade. So at the 20-period moving average, after getting long at the bottom there, I hedged this position. So this position is still open, the long from the bottom, hedged at the 20-period moving average. It's still open, and we have about 750 points locked in profit. No matter what this market does now, whether it moves up or down, whether it crashes or whether it goes to the moon, my profit will remain 750 points. Only when I start to exit or adjust my hedge will that profit start to change or potentially change. So if I closed my long position right now, and I closed the short position that I have on the same instrument, German 30, if I close them both simultaneously right now, I would have 750, I think I'm exaggerating, I apologize. I think it's 720, 28, maybe 738 points of profit locked in. No matter what happens, no matter when I close them, whether it's today, tomorrow, next year, makes no difference whatsoever, apart from the overnight carry costs, which are pretty low because I got one long and one short in any case. So I just wanted to highlight that there on the German 30. I'm not sure if I was clear enough about the fact that I hedged and I didn't exit the trade. That trade is still open, and I still have the opportunity to now, remember that's a short hedge. I could actually take that short hedge off right now. Let's have a look at it more closely. I could take that short hedge off in profit and add another long, or I could add another short to this short hedge right now and try and ride this down. Or I could just take them both off and realize the 730 points of profit. So there's all sorts of flexibility that hedging introduces to your trading, and I'd strongly encourage you to learn how to do it. And if you're in the US or in Canada where hedging is not allowed, learn how to open two individual separate trading accounts, and you can hedge using two trading accounts on the same instrument. But if you don't know how to hedge and you're not sure about it, Or if you're just struggling with your trading, please take a look at my private group. There's a link below. And I was joking a little bit earlier on when I said rather send your money to me than lose it in the trades that you take. But I was kind of serious in a way that you will probably, if the stats are correct, and I think they are, I'm talking to you, I'm looking at you, you will probably lose all your money in trading. And it's not because it's you, it's because that 95 or something % of traders lose their money. So why should you be different? If you don't learn how to trade properly and you don't take advantage of the resources that are out there, you probably won't be different. You'll be the same as the rest of the 95%. So rather than sending that $60 a month or $100, whatever, $90, depending on the discounts, rather than sending that into the market, into the bottomless pit, send it to me and I'll teach you how to trade, and you won't have to keep losing all that money all the time, and you'll help me to pay for my subscriptions to Bloomberg and charts and all that sort of thing. And that's it, folks. Greetings, Jazz from California. Nice to see you too. Thanks for visiting. Okay, folks, no other questions. I think we should finish off now then. It's 9 a.m., 9:08 a.m. Eastern Time, and the markets will be open in 22 minutes, and it could be a banger of note today. I think we're going to see the stock markets moving up. I think we're going to see crypto moving up. I think we're going to see gold collapsing, and I think we're going to see natural gas and WTI sideways today probably to upwards, and then collapsing again next week. So I'm prepared to gather a little bit of profit on this upward move, the sort of correction on the natural gas trade, and then look to ride this down next week. The same with crude oil, although I'm holding on to my crude oil positions. But I think we could get a bit of a bounce back up maybe to the 20-period moving average and this ledge here at about, I don't know, 382. And maybe even with a bit of luck back up to this sort of area here. And remember, on the futures, we have an overnight gap that still needs to be filled. Let's quickly look at the futures. And actually, it's not easy to see it there. I'm going to go back to the continuous. No, it has been filled already. No worries. Yeah, no, forget that comment. Nothing to do with that. Nothing to do with what our trade's doing right now. So that's it, folks. So I'll be looking to sell natural gas and sell crude oil later on. But in lieu of that, I've taken a longer natural gas, just a quick short one, maybe today and tomorrow. And then I'll try and short the futures later on. We won't be trading the continuous ETF because of the overnight carry costs. We're in the futures now. And then WTI, I'm not adjusting this position. We've taken 25% profit off on this trade down at the bottom here. And I'll be looking to resell that 25% somewhere up, higher up, if we do get that chance. Otherwise, I'm holding the rest of it for a move down to the bottom of the channel at $55 and then down. And that's it, folks. Please like and subscribe if you enjoyed the video and the session. I'd really appreciate your like and subscribe. The buttons are right below this video, and all you got to do is press your mouse, move the thing over there, click those buttons. It really helps the channel, and it'll make me very happy. And it'll encourage others to join as well, which I'll be pretty pleased about. All right, thank you, Fariba. Thank you, everyone else. And I see there are no more questions, so I think I'm going to call this to an end. And good luck for your trading today, folks. It's going to be an exciting day, I think. And let's just hope that all of this Iran stuff is now over. I really just do think that, personally, I think this is a good thing. I don't think Iran, or anyone else for that matter, should have nuclear weapons. But, you know, we don't want more people to have nuclear weapons than already do. And particularly, and I've got nothing against Iranians or anyone from that part of the world. I worked and lived in the Middle East for a long time. So I know a lot of people from Iran. I know lots of Iranians. So I've got nothing against Iranians, but I do have a problem with the Iranian mullahs with their hands on nuclear weapons. Simple as that. And I think this has been a traumatic and difficult period for the whole world, really, but particularly for those in Iran and those in Israel. And let's just hope it's all over. And that I think the Iranians have got a real opportunity for, these are smart, clever, technological people. It's a magnificent country. It's beautiful. And the Iranians are fantastic people. They just need to get it together, and they could be the jewel of, not the Levant, but close to the Levant. Okay, folks, have a great day. I'll see you soon, and we'll hold a live stream for members tomorrow, I think, but I'll let you know in due course.